Hi, this is Randy Finney with Right Side of the Chart, and this is a late morning session update for Tuesday, November 26, 2019. In this one, what I want to do is update the broad markets. Actually, my plan today is to update all the individual sectors and different asset classes that I've been highlighting recently. I'm talking about the broad markets and major commodities. The ones that I'm watching, not all commodities, but soybean, coffee, wheat. Those I've highlighted in recent months. Precious metals, gold, silver, platinum, palladium, natural gas, oil, Bitcoin, and the euro, and treasury bonds. I think that's going to be it. So I'm going to cover all those other asset classes in a follow-up video. We'll keep this one, I want to break them down, not do these 40-minute videos, try to keep this one quick by looking at only the broad market, so 15 minutes or less. If I can do it in 10, great. And here's the thing, not a lot has changed. I'm not going to talk very much. I've been saying that for a while, but that's as far as the things that I use in a chart and I'm looking at. I don't see any technical change. I see a market that's still in an uptrend. There's no mistaking that. That uptrend hasn't really been called into question. There have been a few check marks we got for maybe a breakdown, but not enough yet. And what we're looking at here, I'm going to start real quickly in case you're haven't caught up on my analysis in a while. We have these trend lines off the October 3rd lows right there. SPY and QQQ broke down, but we never broke. I had some support levels on the 60-minute chart that I needed to see get taken out to really, give a pretty a sell signal for short term, at least a minor correction, and we never got those. We still stayed above those short-term support levels on the 60-minute charts, and so a little kickback rally so far. And as far as me saying nothing has changed technically from this chart, it's the same old, same old. I've been talking about these divergences building now for months. We did have a divergent high here. We had a correction after that. We went on. That was a slightly higher high, another correction. And from this point, and I said if we break out to new highs again anytime soon, it would be, and it was so far, another extension really of the same divergences. These were those divergences intact before. And as of now, those divergences are still intact. You have the PPO down here making a series of, continues to make a series of lower highs. It hasn't yet taken out this point where these divergences started. The divergence started back there. And the RSI is still making at least equal or lower highs. But if we go up much more, that can all change. So we're really pushing now. We're getting to push the limits of these divergences. Again, if you move up much higher, in this line is no longer flat or downward sloping, you don't have the divergence. It's that simple. Now, very important, I say this all the time, divergences are not, and I repeat, are not a sell signal or a buy signal if they're positive divergences. Just like being overbought or oversold is not a buy or sell signal. It's just merely an indication that a pullback or near term, at least a correction, is likely to come soon. And so what hasn't changed, we also pointed out the PPO recently made a bearish crossover. In fact, it was the first bearish crossover since that point. And back here, I've already gone over that quite a bit recently in the last couple weeks. And as of now, that's still intact. You see the red bars. We haven't yet crossed back up. And all that matters is really how you print the close today. And if it's just a slight marginal, sometimes you get a little like whippy cross here. But right now, the PPO crossover is still in play, and it's something to note. So like I said, basically we had a lot of several, not a lot, but a few check marks over the last week or so with some things happening, but not enough. We have not seen the impulsive selling nor those shorter term levels, which I'll get to in a second, give way in order to give us at least a decent near term, short term sell signal. QQQ, same story. Here's your divergence, still intact, both on the RSI and the PPO. That PPO bearish crossover still intact right now, as of now. We'll see what happens tomorrow. Remember, I wanted to reiterate, as I mentioned in yesterday's pre-market update and the things I'm watching this week post, I don't trade. I've learned over the years it's a good week to take off. If I wasn't wanting to do these updates for you, and I've been doing some other things, and not, I'm not sitting, in this chair 10 hours plus a day like I'd usually do, because I prefer to pass on most taking new positions, because again, my experience has been due to the low volume. Markets are always closed on Thanksgiving Day in the U.S., and then they have a half day the following day. They close early at 1 p.m. and the volume is almost non-existent. Even those days leading up, a lot of traders are taking vacation. They're gone. So what happens is in a low volume market, just think of a low volume security. It's the same story. That's how that Clovis stock I pointed out, that trade idea a couple weeks back, broke out here. Now, yeah, volume's been big on the increase, but it's typically a thinly traded stock. And so what happens is when you have an lopsided buying pressure, a lot more buyers than sellers, that's how a stock like this goes up 150% in 2 weeks. Now, the market's not going to go up 150% in 2 weeks, but the point is when you have low volume trading weeks, trading days, like around New Year's, Christmas, around that time period, Thanksgiving, it doesn't take a lot of buying or selling to move the market or move individual stocks. And so therefore, because of that, you have a higher chance, and again, it's been my experience, a higher chance of whipsaw signals on breakouts. So if you want to take them, no problem. I'm going to get to IWM in a second, which broke out yesterday. We'll go over those charts, but I just want to say nothing has changed on the large caps at all. We still need more evidence on the downside to trigger some, high probability or sell signals that we could say with a fair degree of confidence, look, we're going to get a 3, 4, 5% correction. XLK. Same story. That's the big sector I'm watching. Breakdown, but again, there were a couple red candles, but you never got that big impulsive selling like you did back here and here. You want to see on follow through. So far, it's still below trend, still at a divergent high. Everything that that I covered in the last update last week, nothing there has changed yet. It's not going down. It's certainly still in an uptrend, and we need additional evidence. So I'm not going to go over each and every sector. We'll watch this one. We'll watch the broad markets, and then let me just roll into the futures real quick. Oh no, let me do IWM, then we'll get to the futures. Okay, so IWM did break out yesterday, and it was actually, that one was on good volume. That was also a super, super well-watched level. I've covered this many times in the past. IWM has been in a trading range nearly the entire year right here, this trading range. You had a V bottom in the markets down into the December 25th lows, 26th lows, with a V recovery, an equal perfect V, and that was in early January. From there, we set up and have been trading in a sideways range. And then yesterday, we broke out of that range. I had that number. It's not a hard line, but about 159.41, give or take. Now, I want to point out that again, this is, to me, I take it with a grain of salt because it came on the week of Thanksgiving, came yesterday. So far, follow through today. So I want to say this. There's nothing wrong with taking this breakout. I might pass on certain breakouts. If you're bullish on the market, I can tell you this is a better looking sector. I would rather be long IWM than I would be QQQ or SPY. But I'll wait till next week. I'm not in a rush. If this thing goes up, maybe if I want in, I buy it at a higher price. I wouldn't be surprised at all if it came back in. And if you're looking for an entry on IWM, come buy it back at 159.40. Remember, we have durable goods, GDP, and jobless claims all tomorrow at 8:30 a.m. before the market opens. Those three reports are likely, now it can come in anywhere. They can come in at consensus. One can come in bullish. One could be a little more bearish. It could be a wash. But I think what will happen tomorrow is it's either going to reaffirm there's been a just tremendous shift in the last just about 3-4 weeks here, a complete abatement of the fears of recession fears. All of a sudden it seems there's just a quick rapid shift in sentiment that, hey, everything is as good as it gets. You've got an easy Fed. The recession fears were overblown. We're going up the rest of the year. We're going up into 2020. Period. And that's what the markets are saying. That's what I'm hearing and reading. And hey, maybe that is the case. I'm going to say that could be the case. However, there's still there's several indicators that have been trending down. And I just want to say tomorrow could be a big day where it either reaffirms what most people are thinking, that hey, everything's in good shape. The recession fears, at least for the time being, have been overblown, or maybe not. So keep an eye on those. GDP, durable goods, jobless claims, any or all of those come in below expectations, surprise the market with this, with the technicals that I've been, covering and harping on for a long time now, divergences, low volume, VIX at low levels, extreme sentiment. Those are the ingredients that typically accompany these big drops like this, but they don't have to. They're just, I've gone over this before. The post I made a few years back on hurricane or tornado warnings versus watches. And again, that's a warning is just say, look, all the ingredients are there. You might get one. A watch is, hey, it's pretty imminent. This would be, a hurricane watch when you broke down here. This was a hurricane warning up here, but when you broke that support, look, a correction, the odds for a correction went up quite a bit, just like a hurricane or tornado watch. When you get a watch, you better take heed, and because there's a good chance you're going to get hit. So right now, like I said, just more of a warning, because a lot of those things are in place, but sometimes the market will climb a wall of worry and also work its way through that. So I wanted to say that IWM broke out yesterday on volume, is following through so far today. I'll pass. I'll wait till next week. And I should point out too that, back here, I'm going to go to a different board. Back here in, let's see, that was early May, we had almost identical, two big candles and a breakout right there. And here's what you need to realize. If and when a breakout fails, it's usually a very bearish technical event, because you have a lot of longs that jump into the breakout and you have a lot of shorts that get squeezed out, and then if and when it fails, you have the longs, they get stopped out on the way down, and you don't have a lot of short interest for shorts to cover. So I would not bet on this to fail. That's just, to me, a gamble. I'd rather go to Vegas. They'll give you free drinks if you want to bet with not even equal odds, but and I wouldn't say this is equal odds. A breakout is a breakout until unless fails. Where you'd want to bet it is if it fails, then maybe jump in. You might not hit the top. Trade as you want. It's there's a lot of ways to trade. Sometimes I will bank on a breakout failing, and here's how I would trade it. Let's say today, below today's highs, you might want to wait for durable goods, GDP, and jobless claims to be out of the way tomorrow, or you gamble and you say, look, I'm going to bet that they're going to come in below expectation. The market's going to have a big gap down, failed breakout. But either way, the more green days you build, the more follow through in a breakout, the more likely it is to stick. See, this was just, 2 days, the second day was green, then you failed. So that's food for thought. Now, on the flip side, it's a breakout. If you say, well, okay, let's quit trying to get cute and second guess everything what might happen in the market. Let's just play the charts for what they are. This is TA 101. You have a breakout. There is your breakout candle right there. You can set a stop. I wouldn't set it right below the breakout candle, because from my experience, if you back test, sometimes it'll come back in a little bit. You'll probably have your stop hit maybe below this cluster of candles there, or not too far below 156, and that would allow you to stay in that. Now if it goes much lower, then we're probably going to go back to the bottom of the channel, and I would imagine, that's just my guess, if breakout happened to fail, we've been in this channel so long, if we go back to the bottom again, we're probably going to go down through the bottom. But let's not even get that far ahead of ourselves, because right now we've got a breakout that's in play and it hasn't even failed. So I'm going to move on now. I'll look at the 60-minute charts of the future. We'll wrap this video up, and then I'll get to the charts of those individual commodities, other asset classes, treasury bonds, currencies, things like that. Okay, RTY, to try to get a little visibility to what might happen tomorrow and maybe into next week. What you see here is I have divergence lines drawn, but I have them up a little higher, and I'm looking at this. Actually, they're getting a little closer to forming right now. We do have negative divergence right now in IWM. Ideally, what I like to see, and you don't always get it, is a bullish crossover and then a bearish crossover, and that effectively puts in a lower peak, lower low or lower high. But as of now, you can see there's divergence, just like we had right here. It's not drawn out. I'll add it for you. There was our last negative divergence right there. See into that high, and when it failed, you went down and you worked your way down in this mostly sideways but slightly downward correction. So that's something to watch right there. It's also a reason why I don't care to take this breakout right now. But again, maybe tomorrow we'll see, or I'm sorry, next week, if anything, before I might consider jumping on the long side or the short side. I just want to see. I want this week to be over before I really start, getting back into taking new positions. I don't want to be whipped around, and that's usually what, in the past, it's been my experience when you try to trade the week of Thanksgiving, just like the week of, Christmas. NQ, NASDAQ 100 60-minute chart. Same old, nothing's changed. We're pushing, although we are pushing the upper limits of the divergences. Here's their divergence right here. Started here. Negative divergence has been building. This most recent high, still divergent high, because you're making higher highs in prices, and if you're making equal or lower lows on the indicators like you are here, you have roughly equal highs, I should say. Yeah, equal highs on the RSI 9 setting on the 60-minute chart, and clearly, lower highs still in the RSI, or the PPO, I'm sorry, excuse me. And the levels to watch, really, if you have a trend line here, you can see a little small trend line, but to me, the big level is still in yellow, the same one I've been harping on for weeks now, 8,200. It's now about 2.5% away. We have to go drop about 2.5% to get there. If and when that breaks, I still maintain these targets, but we haven't triggered that. So that's what I was talking about before. With the daily charts, we had a couple check marks recently, but not enough. And when you have such a resilient trend, no matter how many red flags you have, you want to give it the benefit of the doubt. And that would be that 8,200. I think will greatly increase the odds, and that we're going lower from there. All right, ES, the S&P 500 E-mini futures. The levels that I've been highlighting recently were those. We actually have a confluence of support. So the levels are that I'm watching, these two trend lines right here. We have this uptrend line right there, and this one, I know if you can't make it out, I know it might be hard to see on the chart. And then I also have a support zone that's pretty darn solid. It's a pretty, it's not a super solid, but it's a decent support zone. So I've added a minor trend line here, but really what you want to see, I'm going to tighten this up. You still have the negative divergences, and you are overbought. That's another thing to mention. Overbought. That's why, like I said, the reports tomorrow have the potential to really rock the market. Could they explode it to the upside? Yeah, but I think the risk, and I've maintained this for a while, the risk reward ratio is just not favorable. But you're getting stretched. You usually get at least a little pullback or some consolidation when you hit this level on the RSI. It's not a guarantee, but the divergence is still in place. That's what I wanted to mention. And then when I tighten this up a little bit for you, if I can grab it here. Okay, you can see there's that level, about 30, we'll call it 3,100, give or take, because it's more of a support zone. That's why I had it in yellow. That to me is the level that needs to get taken out on ES, and if it happens, you'll also have taken out this trend line and that other trend line that I talked about. They're all kind of coming in together right now, and so those are levels to watch. All right, let's wrap this one up here, and we'll see what happens. And now I want to go ahead and as I upload this video, I'll start on the next one and finish those. Like I said, my goal here is to cover stock indexes, sectors, and then the major asset classes, stocks, bonds. Well, these are stocks, of course, bonds, TLT, treasury bonds, currencies, the euro, the US dollar, and gold, precious metals, oil, natural gas. I'll get to those in the next video. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.